We are live. I'm Seb 3.0, wishing you a very happy new year and sending you my best wishes for 2023. And you're going to need them because 2022 was really hard on the crypto industry. But you know what they say, once you hit that bottom, you can only get back up again. So today, we're looking forward, offering perhaps a glimmer of hope for the new year and to help lift your collective spirits and get you excited about all the great technical ecosystem developments and technical developments happening this year. I've gathered a rockstar panel. So we've got Felix Luch of Chorus One. We have Sunny Agarwal of Osmosis, Sam Hart of the Interchain Foundation, and Cryptocito of, well, Cryptocito. The man and the brand are inseparable. And we might have a surprise guest come in during the panel. So will this panel offer bullish optimism or be the bearer of bad news? Well, you got to stay tuned to find out. And by the way, none of what we discuss here is financial advice. You should always do your own research when it comes to crypto. Before we get started, make sure to hit the like button, the notification bell, and subscribe to get notified when I go live every week. Cosmos in 2023, that's coming up next, right here on the Interop. Hello, everyone, and welcome to this very special edition of the Interop. Thanks for joining me. Had a little issues there, technical issues on the. I don't usually do live streams with like 5 people, so I just like mess with my whole setup. But glad you could make it. Glad we're all here, and like I said, we might have a surprise person join in during the show. So yeah, how's everybody's new year starting off, and also. What's your sentiment right now in terms of like crypto and the Cosmos ecosystem? I think more generally. I don't know if someone wants to start with that.
I want to just start by saying thanks for setting this up, and I love this format. Like, this is highly professional stuff. I feel like I'm on CNBC or something right now. So really,
we'll talk later.
Really cool stuff. Yeah, I mean, it was. I felt like it was really good the last 2-3 weeks to decouple a little bit from the crypto madness, crypto Twitter madness every day, 24/7. So I personally spent some time with family. I'm sure most of you as well. Traveled a little bit, and yeah. But I'm very happy to be back. I got a new camera, much
Looks
better
good.
quality now. So I am stacking in the bear market, and yeah, excited to talk about Cosmos.
Yeah, we're still hearing the backing track. Seb, can you turn that off? Or like, I mean, maybe we can go like this.
Okay, so
the
that,
CFBC vibes.
See, I couldn't hear it. That's why I was. Yeah, thanks for letting me know. Yeah, it's a bit
No
weird.
worries,
Yeah,
no worries.
I think I was at a club, like trying to talk about. This is what I do at the club, anyways. Normally, just talking about crypto. So,
Right. Yeah. Yeah. Same for me for Cryptocito. I also tuned out like for a good 2-3 weeks almost now. So that's quite interesting. I think I did better than ever before in the last 5 years in terms of like not paying so much attention to what's happening. So I think that's good. I feel like, yeah, similar to when we were in like 2018 or 19 bear market, like long going sideways, but lots of stuff hopefully happening in parallel. So yeah, excited for this building period.
Yeah, feeling pretty bearish, but good personally. Yeah, it's a time of like personal healing. Nature is healing. I guess like some personal news is I am wrapping up at the ICF. Have already wrapped, so I'm super excited to do stuff in the ecosystem. I've been kind of like LARPing doing that for a little while, just like talking to lots of teams and trying to make sure that they're okay and it's in the right direction. And now I get to kind of do that more full time, which is great.
Is this alpha? Are you announcing this here on the podcast that you're leaving the ICF, or people know this already?
I posted about it, but
okay, I haven't seen that.
Yeah, it's real now.
what was the question again?
Yeah, well, how are you feeling right now about the whole
when
ecosystem?
I? That's the question.
So
Back up. $10.
We'll see. No, I'm feeling pretty good. I mean, yeah, same. Got quite. I was very AFK for like the last like week and a half, which was kind of nice. But you know, I don't know. I feel like our team has actually been feeling really almost rejuvenated after the FTX collapse. It sounds kind of terrible, but like there was a period there for like where it's like, you know, there was a lot of questioning of like, what is the point of DeFi? And we had a thesis on what the point of DeFi was, which was like largely around privacy, but like our like take, you know, we had like some investors we would talk to and stuff who like were almost like bearish on DeFi because they were just like, well, FTX is just doing, you know, the premise of DeFi was like getting access to these like, you know, getting global access to like more asset classes. And it's like, you know, and it's like, they were like, oh, but FTX is just like figuring out the regulatory compliant way of doing this somehow. And like, so, and there was actually a little bit of bearishness on DeFi as a whole. And I think that like, that kind of just all got really reversed after that. And it was like, wait a second, look, like this whole thing of like, you know, not your keys, not your coins, like, you know, don't trust, verify. It's like, you know, it was just a reminder that we needed, I guess. And so, you know, our team has been like, yeah, okay, this is why we're building a DEX. So, yeah.
Yeah.
I'm a little scared that you're gonna kick this privacy thing down the road, though. Like, I still think that's the core.
I agree. No. So it was like, so that was our like. I think that was like is still one of the main things that like DEXs can do better than central. That you literally just can't do with centralized exchanges, in our opinion. But like, but also just this notion of like, it seemed that people had just fallen complacent and just like trust centralized exchanges, and it's like the trustlessness was no longer the like. I feel it. I don't know. To me, it felt like for a while the trustlessness aspect was no longer the selling point of DEXs, and I feel like that came back to the forefront again.
Yeah.
And that's kind of like why we're thinking a lot about like, okay, custody and how do we make the UX around that kind of stuff much easier.
Yeah, I think I echoed that sentiment. You know, as FTX was collapsing, it's funny. Like we were in my co-founder and I were in Dubai, and we were, you know, talking to investors, trying to raise funds, and we were at this very like kind of TradFi asset investment manager conference, and like our point of view, you know, at that time, and you know what we've maintained is that this is actually long term going to be good for crypto, while everybody else was seeing it as just like this catastrophic event from which crypto could never recover from. I think I'm more bullish on decentralized apps and DeFi and the whole, you know, foundational promise of crypto than I've ever been after this, because it just demonstrates how badly it's needed. And, you know, obviously privacy, as you mentioned, Sam, is a very important part of that, and one that the industry needs to work on further. But if there's one thing I think that signals to me that, you know, the next couple of years is going to be huge for decentralized finance, at least one very positive signal that doesn't get talked enough about is that, you know, the regulatory framework in Europe, MiCA, excluded DeFi from its first version. And to me, that's like a huge relief, that where, you know, a year ago, it wasn't clear whether or not like we would be able to continue to innovate in DeFi. And the European Commission has given us sort of a green light to continue innovating in the space. You know, mind you, stablecoins might be regulated, but at least the types of things that we're all sort of rooting for and passionate about will continue to be able to develop, at least for the next couple of years, until they pass a new set of regulations, you know, that will be more adapted to decentralized finance. So yeah, I'm feeling pretty bullish at this point, and like pretty optimistic about the next year or two. Yeah. So I mean, there are a few topics here that I wanted to talk about, and Yeah, I don't know if we'll have time to go through all of them, but hopefully we'll get to touch a little bit on each of them. And I feel like there's like three big topics that three main topics that I think is on a lot of people's minds, or at least mine. And one is this idea of like modular blockchains and app chains, and how we reason about what are the different types of applications that are going to want to build on each of these different infrastructure design choices. And then there's interoperability, not just in Cosmos, but beyond Cosmos. I feel like there's a lot of positive, signs that IBC is being adopted beyond the Cosmos SDK, ecosystem where it was birthed. And then the other big thing I think that will be huge is the impact that native USDC will have on the ecosystem. And in addition to DYDX launching as an app chain, and just the amount of volume that DYDX can bring to the ecosystem. So those are three big topics that I'd like to talk about. And then maybe other things that are also important is like, okay, shared security is coming to Cosmos, and I think that topic's been thoroughly discussed. But if we have like new insights, certainly we can talk about that, and also how that relates to MEV and also liquid staking. So let's maybe start with how's that sound? Are those things you guys feel comfortable talking about here? All right, let's do it then. So yeah, app chains, modular. Are they complementary or are they competing theses? Like, and how will this sort of play out in your view over the next year, especially as Celestia plans to launch sometime this year? We have protocols like Fuel also that are tackling more of the execution and settlement layer. How will this all jive with the app chain thesis? Is it complementary or competing with the app chain thesis?
I have some thoughts on this.
Go for it.
I definitely think they're complementary. There are efficiency advantages and security advantages to the kind of like fully modular Celestia kind of model. There are inherent limitations. So you are kind of assuming that you're doing no kind of boundary breaking operations. So there are applications that you just can't build in a fully modular way. You need to have integrated components. I think that's great. Like Cosmos is about diversity. Like we should have as diverse an ecosystem as possible. One of the things that I think is maybe underappreciated about the modular thesis is just the fact that like Celestia or the kind of data availability provider has a direct incentive to like build out an ecosystem and kind of make sure that it's healthy. So that is something that I think is really positive, and will end up being kind of complementary. I'm really glad that Celestia is in Cosmos, so that there can be that kind of like cooperative effect where like they have a really rich dynamic ecosystem. It looks a little bit different than other things that are around it. Yeah, I mean that's super exciting.
Do we think that Celestia launching and building this ecosystem will help bring, well, like more developers to the broader Cosmos interchain ecosystem, and also liquidity to the ecosystem? Or do we think that the Celestia ecosystem will sort of live in its as a somewhat detached ecosystem from the rest of what we typically know as like the IBC ecosystem. Any thoughts on that?
I mean, I think they're doing a lot of stuff on making it so you can turn Cosmos SDK based chains into rollups, and so at that point, the fact as long as these chains have IBC enabled, I think that's sort of what will make it. Like I don't like it's similar to like it's very similar to like if a chain uses ICS with the Cosmos hub, it doesn't make it so it's getting security from the Cosmos hub, right? But that doesn't mean it's like okay, it has to route its IBC packets and stuff through the Cosmos hub. It still has its own. It'll still just do like peer-to-peer IBC, just like any Cosmos chain today would. It just where it's getting security from it. And my understanding is the Celestia model is like very similar.
Yeah, there's one caveat, which is you do need to build clients a little bit differently, like clients, and people should have realistic expectations. Like the client design stuff is lagging behind the other development. So like maybe the main chain will be connected once Celestia launches, but like it's gonna take time for the rest of the ecosystem, like the rest of the rollup ecosystem, to get integrated into IBC.
Yeah.
So what it sounds like is that if we can take Cosmos SDK chains and effectively turn them into rollups, what is that? Let's say like some large chains decide that they want to sort of rid themselves of the hassle of dealing with validators and so their own security. What does that mean for staking providers? Felix, is this something you guys are thinking about internally? Like, yeah, we're going to lose like half of our stake and our revenues to chains that decide to just roll up on Celestia.
Of stake on Celestia.
Does your business model become obsolete from then on?
I think it certainly. I mean, yeah, the role of like the node operator is changing. I think in a lot of ways. I think this is one dimension of it. I think you also mentioned like ZK, zero knowledge stuff. I think that's also in a way impacting how much you rely on validators as this sort of like party bringing security, and so it, like in that sense the role diminishes, I guess, a little bit. So you might not need like that many validators anymore in the future. I think at the same time though, now we have this new ecosystem joining, I guess, more developers in Cosmos in general, more sophisticated applications that have like different needs. So there will be new roles for new node operators to carry out. I think we already saw a lot of it over the last years, right? Starting with maybe like, Oracle, providing Oracle data, whatever else, doing like ZK proving or verification of that. I think it's going to be like definitely developing, changing, but if you stay on top of the game and follow these new roles and find your a niche there, you can still find something, right? There's always still something that needs to be run, even more so, I think, right? Chains get bigger, more computation, so there's a lot to do. It's just kind of a changing role, in my opinion.
Yeah, I think that's one thing I'd say is like, this was people think that like rollups are okay with like single operators, like single provers, and I think that's actually really wrong. The rollup architecture gives you safety, but it doesn't give you liveness or censorship and MEV resistance, right? And like for the other two things, you still need a decentralized operator set. And at least all the Ethereum L2s, I feel like they all have like a roadmap to decentralization, but I haven't seen any actual like efforts towards that. I actually think Celestia is like the ecosystem of rollups that are being built on it, because they're already so familiar with Tendermint stack and everything, is actually probably we're gonna start to see the first like properly decentralized rollup architecture. So I think that's pretty exciting. One thing I'll add about Celestia in general is like I'll say one thing I never quite understood is this part of the modular thesis that doesn't really click that much for me is like why I feel like settlement if you're moving towards a rollup model of the world, it doesn't make sense for me for settlement to be separated from data availability, because the entire premise of settlement is a claim. Like, settlement exists is basically a way of saying, like, hey, we know data is available, and so we're going to finalize this, right? And so, like, this idea that settlement is a separate system than data availability feels odd to me, right? Like, in Ethereum 2.0, the claim is, okay, Ethereum, or not 2.0, whatever, it's Ethereum, I don't know, they call it 2.0 or not, but it's like, in Ethereum, the idea is that, like, okay, the Ethereum base chain is both the settlement layer and the data availability layer. That is a model of the world that makes sense to me. In the Cosmos architecture, the app chain fully vertically integrated architecture, it's like, okay, it's like, okay, the execution, the settlement, and the data availability is all one stack. That makes sense. You can separate execution from settlement and data availability, but I just don't understand the Celestia model of the world of separating settlement from data availability. I just don't see the point of that. So for me, I feel like either Celestia has to become a settlement layer as well, which just makes it just like any other L1, or yeah, I don't know. That's kind of where I'm kind of stuck on this.
Yeah,
I see it. I mean, a lot of this comes down to like very kind of fine points around the like fork choice rule, and where you're sourcing data in these kind of like edge cases. But I think it's fine to outsource it, particularly if you have alternatives available. And you can even kind of store data temporarily to work around fork choice. One note about the modular paradigm, or just like modularization in general, is like the fact that you're able to modularize something means that it is going to be commoditized. And so, like, this Celestia validator set, like, the validators there are going to be commoditized. Like, so there's going to be, kind of the similar effects that you see in commodity markets, where you have large players that are able to bring like economies of scale, and then the revenues are kind of like driven down to a minimum.
Yeah, I think, I mean, speaking of the commodification, right, I think that my kind of thing with Celestia is I actually just see their data availability stack just becoming like copied into every Cosmos chain, right? It's like, so it's interesting that, like, when there's like services, it's it's interesting to see what different chains choose to outsource versus internalize, right? Like, for example, bridging, right? It's interesting. You see some chains decided to outsource it, right? Osmosis has said, you know what, we're just like, okay, we're outsourcing this to a different chain. We don't want to handle it. While, other Injective, for example, they've completely internalized, right? They run their own Gravity Bridge instantiation. And like, so I'm interested. Something like threshold decryption, I actually fully expect that like every chain is just going to fully internalize it, right? Like, our team and Anoma are like doing a lot of the dev work, but we actually expect it to be just like forked into every, like, most Cosmos chains will just put it into their own code base. So I'm not sure what's going to happen with like data availability solutions. Are people going to want to outsource it to a chain like Celestia, or is it just going to become a module that everyone imports into their own chain?
Sito, on the community side, what are you seeing like in terms of sentiment around like the app chain and modular thesis, and what kind of projects are you seeing that are excited about like building on the modular stack?
Yeah, I was gonna say, I mean, I had an interview with Nick White like a couple of weeks ago, and he actually said, going back to your original question about whether the modular like thesis and the app chain thesis are complementing each other or competing. He actually said that like Celestia is basically an app chain for block space, and I think they're like also super core Cosmos. I think they don't consider Celestia being an app chain thesis killer or whatever. So I think it's quite complementing. And what I see, like, I mean, I'm not too deep into that, side of the things, but I think what you can already see is that especially a lot of the people also from the Ethereum community are really excited to see all these diverse developments going on in Cosmos in general. And I think, we're just going to see so many projects. Like at this point, honestly, I lost oversight of everything that's going on. It's like just too much going on. But yeah, I mean, Celestia is definitely exciting. And I'm looking forward to see when they launch, how they will play out. As Sam said, I think building out the ecosystem is really, really important. And it will be interesting to see like if they can kind of like deliver upon the promise of the technology itself. So yeah, hard for me to say, but yeah, definitely interesting stuff.
Yeah, I think Felix is having some connection issues. Hopefully we get him back. One thing I've really found hard to reason about is like, so a lot of the sort of imagery, like if you search like modular blockchain, like you'll get this graph, right, that has settlement, execution settlement, data availability, consensus on one axis, and then like modular and monolithic and all the different Validium and sovereign rollup and Sevmos and settlement rollup, etc. And I find it's not extremely helpful. Like it helps to understand the different configurations, but it's not really helpful in understanding, hey, I've got a blockchain idea, right? Like I want to build an app. Which of these different infrastructure choices is right for me? Mm-hmm. And the way I've started thinking about this, and I don't know if this is correct, but I see it as kind of, in the same way that in Web 2, there are like, you can build an application, you can build a website on WordPress or on Squarespace. And like, to me, that's going to be the equivalent of building your app as a smart contract on Ethereum or on a smart contract rollup. And then as you grow and as you need more sovereignty and more control over your execution environment, like the settlement, and then ultimately getting all the way up to building your own app chain, which to me is kind of the equivalent of like Google and Amazon building your own data centers, their own network infrastructure, their own even hardware. You're going to be able to choose from any one of these solutions, and you might evolve, right? So you might go from having a settlement rollup and going to like a sovereign rollup where you have more control over your stack, and maybe that's the equivalent of building your business on AWS, or some inferior version of that would be like to build your app on Vercel, right, where you're limited in what you can do and the types of infrastructure that you have. So like I'm trying to reason about like how this maps out to different levels of scale and different sizes of applications, and at which point do you say, okay, like we're going to upgrade from say like a sovereign rollup to building our own app chain because we need to be perfectly integrated, we need to control like different aspects of our tech, we need to have more granular governance alignment, we need to be able to internalize MEV, this sort of thing. So yeah, I haven't seen anybody present it that way, and sort of wondering what you guys think about like this idea of thinking it from this use case perspective.
Well, maybe I can just share like in general what I think. I mean, you mentioned DYDX earlier, right? They're like the perfect example. Like they moved from Ethereum itself to L2 solutions. I think there were another one before it, and they went to Starkware. Now they're building their own Cosmos app chain. And I think they just figured out, by having an active product, active users, that they need to evolve and they need to find the best infrastructure that they can build a product on. There was another project called Syntropy that just announced they're going to migrate over from Substrate over to Cosmos as well. And I'm seeing a lot of interest also from other projects. I think one thing might just be, and I'm not, technical at all, so I can't comment on what's the differences between Cosmos SDK and Substrate, like in detail. That depends on the use cases from the developer perspective. But I think it also comes down to like, where are actually users? Where is liquidity, right? Where's stuff going on? How is the UX there? And I think, honestly, like in Cosmos, you just have so much yeah, it's all interconnected through IBC. The UX is really great. There's an active, passionate community, sometimes too passionate, and it turns into drama. But I'm sure we all have seen that over the past months. But I think that's a feature of Cosmos, right? That you have all this stuff going on. And yeah, that's why you also see a lot of developers choosing Cosmos. But the product launch will then decide if there's if there's also anything going on there, right? Like if you look at, for example, at Cardano, right? Like Cardano has been promising to be the next big thing, the Ethereum killer, for so many years. Yet you saw just a project before Christmas just like shutting down the entire project, and it was supposed to become the DeFi hub of Cardano. There's like other projects that have never launched. They don't have users. They don't have liquidity. So I think it's a mixture of a lot of technical things, but also where the users, how is the UX, and also interoperability, which I think is probably the name of the game for the next couple of years. Is like, what's the most trustless? I mean, we've seen so many hacks and rugs on bridging solutions, centralized solutions in the last year or two. So I think if IBC continues to prove itself to be reliable, secure, and efficient, I think that's also going to drag in a lot of projects and developers. So
yeah. Well, maybe let's use that as a segue to our the next point here, which is bringing more liquidity into the Cosmos ecosystem, which I think I think will be great in terms of attracting new users, developers, but also just actively people trading on different platforms and investing in projects. And so USDC announced that they're launching on Cosmos this year. Also, DYDX you mentioned is coming to Cosmos, I think this year as well. So what impact do we think that's going to have on the ecosystem as these things start rolling out?
Yeah, I hope my internet will not leave me. I'm dropping in and out here. I'm in like some hotel, so sorry for that. Anyway, so I think, yeah, DYDX is the big one, right? If you look at it just in terms of like trading volume, right? DYDX is definitely probably the top DEX, and all the big market makers are trading there. Now, if it migrates in a way that like everything goes to the Cosmos chain, which I don't think will be, like, the problem with DYDX is it's very opaque right now in terms of like what they're actually doing, what they're working on, what's going to happen. So we can only like speculate, but I think probably they will make it like somewhat of a slower rollout, right? That it's like a migration that takes some months or years until like all the volume is on the new Cosmos chain. So I don't think the impact will be that immediate. I guess in general, probably not that much will change in my opinion in the next few months, because just we're in a bear market and there's just, it will just be like, you got to build your stuff now, and then in the next bull market we'll see what was the right choice or what was good. So, but yeah, that's kind of my view. But like obviously all big kind of validations of the Cosmos stack and the Cosmos thesis, and as CryptoCito already mentioned, right, all these other projects migrating. Yeah, you hear a lot more also from VCs about Cosmos. So I think everything on the right track. Yeah.
So any thoughts on the USDC front? I know you're probably following this pretty closely. So.
No, I just think, people do put a lot of weight on bridge risk, obviously, maybe probably rightfully so over the last year. But and so if you look at like the major, if you look at the incentives on the Osmosis pools, you look at the Osmo USDC pool, and it's actually like the APRs are quite high and is actually not managing to bring in more liquidity, which means that pool has been somewhat saturated, even relative to other pools, and which makes me think that like, okay, a lot of that, there could be many reasons why that pool is not bringing in more liquidity despite the high incentives. And I think a portion of that is that people are put a really high emphasis on this bridge risk, and so if we can move it over to a native Cosmos native version of the stablecoin, that then you remove one of these big sources of bridge risk. And you see this in like other ecosystems in general, that once you have a native stablecoin, it ends up getting a lot more liquidity. On the other hand, I will say that
How much liquidity? How much liquidity?
I mean,
What's
I don't know. We'll see.
How much liquidity right now is in Bridge USDC on Osmosis? Roughly.
I can tell you, it is about $13.5 million right now.
Okay, so it's come down a little bit in the last few months. Yeah.
Yeah. I mean, the liquidity is generally based off paired with Osmo, right? So.
Yeah.
I mentioned this before, but like liquidity is like the big concern in Cosmos right now. And to be perfectly honest, like I don't think it's going to get a lot better this year. Like DYDX is coming, USDC is coming, all this stuff. But like we're talking about late in the year, and it's going to take a long time to ramp up adoption. The more relevant liquidity events are basically going to be liquid staking is number one, I believe, and lending markets starting to open up. But I still think it's going to be like really dry out there for the next year.
One other stat I'd add though is about $13 million of USDC in the liquidity pools, but there's about $40 million of USDC on the Osmosis chain. So that means that there's still about like $27 million that people are just holding in their,
just
sitting in their balances, right? So I think that hopefully we can get those numbers even higher if once some more data are available.
I think one thing also being this kind of like you're exposed to the impermanent loss often with USDC in the Osmo pools right now, right? So if there would be like some stable swap pool between native USDC and some other types of stablecoin, maybe the Agoric stablecoin, right? Like a 3 pool type thing, I'm sure that would gain a bunch of liquidity.
Yeah, I mean, that's the other thing. I would definitely like to see more stable coins. While USDC is great, I don't want to put all our eggs in one basket. We've already done that once before in Cosmos, so I don't want to do that again. I'd like to see more Tether, BUSD, like more centralized stable coins, but then on top of that, also more decentralized stablecoin liquidity, right? You have like USK and Agoric and the Frax folks have been actually really interested in like issuing native Frax in Cosmos as well. So like I think like doing something, getting more stable coins is important. Bring UST back, you said, Felix, in the chat, private chat.
Isn't there like an Osmosis stablecoin in the works?
There is no Osmosis stablecoin in the works.
And what about all those staked ions? What's
Oh, well, that's a different project, right? I mean, the plan for ions are, I mean, for step one is just to build the IBCX index, right? Like that's just, and then this hasn't not been approved by Ion governance, but then it's like, okay, an idea of what to do after that is like you can drive some initial usage of IBCX by issuing a reflexor like stablecoin backed by IBCX. That's sort of like down the road. Step one is launch IBCX first,
and IBCX will be like an index of Cosmos tokens.
Yep.
Yeah, a lot of folks are doing that. Like I know also Club is doing something like that. The folks over at Loom, they've got their index now.
Yeah.
Is it a passive index? Because it'd be cool if it just tracked all Osmo assets.
It is passive. What do you mean by passive index? Or it's a passive index. Well, the DAO does have to approve which assets get added to the basket, but then yes, it is algorithmic on like what the composition is.
So Felix, you're having a hard time staying up on this call. I can see. Hopefully things will get fixed.
My USD comment wasn't appreciated.
Yeah.
I made a proposal. I'm in like the Terra Rebels chat, and as a joke, I made a proposal. Not as a joke. It's as a joke. It was like, hey, you should rename it from USTC back to USC, peg it to 1 cent, and then restart the mechanism all over again. And they were like, oh wait, that's actually not a bad idea. And they're like actually like thinking about it. So I don't know. Maybe we'll have it back again.
Bring back UST, but only at $1. That's
at 1 cent USC.
Yeah. So yeah, interoperability. I think one of the things that I'm quite excited about, and we're starting to see a little bit of, we're starting to see a little bit of this percolate up, is this idea that we can have IBC connected to other ecosystems. So if there are people working on IBC connections to Solana, to Near, to Avalanche. There's people like, I think also on Ethereum, like Electron Labs working on like an IBC connector. And then of course there's the whole prospect of ZK bridges. I know Polymer is working on that stuff. Yeah, how hopeful are you that we're going to start seeing some meaningful connections this year to bridge the gap, pun intended, with other ecosystems?
I think we're definitely going to see them like for the other ones, but I also want to add as well. We're also going like, I think actually the first like non Cosmos SDK IBC connections are actually going to come from like, what we'd still consider Cosmos ecosystem stuff, but just not built on the SDK stack, right? So you have like Namada is launching, or did it already launch, or it's launching very soon. That's not based off the Cosmos SDK. You have Penumbra, you have Anoma down the road, Nomic. So you actually do have a lot of non-Cosmos SDK. I actually think those will probably be the first non-Cosmos SDK based IBC implementations, and then beyond that, though, I know the substrate one is coming along like very well. Like that's probably gonna. I imagine that's a few months out, probably, but like that, I definitely see that coming pretty soon.
Yeah, I initiated the collaboration with Polkadot or Web3 Foundation like 3 years ago. And I mean, shout out to Composable and shout out to Strangelove. Like, they're doing so much hard work to make this happen. Strangelove in particular is like, they are deploying IBC into like multiple ecosystems. It's super, super impressive. Mm-hmm. One thing that I think we kind of figured out this year-ish was like the correct like organizational configuration that's required to actually do these integrations, because it's really hard. Like you need to know the kind of architecture code bases of multiple different ecosystems. They're all very complex. You're talking about building and integrating light client machinery. IBC is pretty complicated protocol when you're initially onboarding, and stuff is like expensive. A lot of teams just like run out of gas halfway through. So there's kind of like a commercial element that's like super important to deliver these things.
And I think maybe to add also, as far as I know, Composable is also, they're not just going to bring IBC to the substrate world, but also Cosmwasm, right? So I think they're very, very bullish on that. So yeah, that's also exciting to see.
Yeah, I'm in general just very bullish on Cosmwasm as a whole. I think somewhere around, I think it was right around Cosmoverse. Our team has always been like, 1 foot in, 1 foot out on Cosmwasm, right? Because like admittedly, our team was like way more comfortable with the Cosmos SDK. It's what we'd been working on for years, and now we do have a few people now who are like, very proficient on Cosmwasm, but like, we always try to like prefer to write things in the SDK as much as possible. But basically at Hackwasm in Colombia, we kind of just made the decision, you know what, like we are going to start writing core functionality of our chain in Cosmwasm at this point, and like core cross-chain IBC composability stuff is going to be in Cosmwasm. So like we have the IBC rate limiting contracts that we have, like that, so that's our like first module in Osmosis. That's like in Cosmwasm. All of mesh security is being written in Cosmwasm. So our take is just like, all chains got to adopt, all Cosmos chains should be adopting Cosmwasm, even if in a limited form, right? It doesn't have to, you can have like a permissioned upload similar to how Osmosis does. But like if any chain that doesn't is going to get left out of the like composability, the next generation of IBC composability, like stuff that's happening.
Do we have an idea of like how many Cosmwasm developers there are in the space, and yeah, how many could come into the space this year?
Like 10, 12.
There's
maybe.
10 Cosmwasm developers.
I don't think that's true.
No, it's there's so few. I mean, we're talking about like 1 to 200.
I don't know. I actually don't think that's true. I think I'm waiting for the Electric Capital developer report to come out for the year, because I'm sure that will have it. But like I mean, largely I think it's, keep in mind the entire Terra ecosystem was all Cosmwasm based, right? And there was actually, there was at least like 50 projects like building on that stack, and like let's assume each of them had like an average of at least 3 to 4 developers, right? There were I think there's definitely more than that, but yeah.
So one thing that was here in the rundown that I also want to talk about is, and we touched on it a little bit, is liquid staking. So liquid staking came online late last year with Stride. Quicksilver finally launched a couple of weeks ago, but had some pretty major hiccups getting started. What's your outlook for liquid staking for this year? Do you think, like you mentioned, Sam, that you think it's going to be a pretty significant in terms of bringing new liquidity in the space? How bullish are we on liquid staking, given the current state of things and
I did not
how complicated it's been? You said something. I'm paraphrasing, but yeah.
I said of the meager amount of liquidity that we're going to see this year, liquid staking is going to be one of the, maybe the largest contributor, that and lending. And yeah, I mean, there's a bunch of super strong teams working on liquid staking. In my kind of taxonomy, I would also consider interfluid staking part of liquid staking.
Of course, yeah, missed that one.
And I think like all these solutions are, needed, but it's going to take time. Like 6 months from now, maybe we'll start to see some traction.
Yeah, I totally agree to that. I think the important thing for liquid staking is that, we have these strong teams building Cosmwasm stuff, and like especially I think developing like interchain queries and interchain accounts, and like really testing that. I think that's really the best outcome there. I also expect minor, actual liquidity for the most part, but we'll see. And sorry for disconnecting. I guess I'll do it maybe one last time, and then I'll have to leave. The stream somehow doesn't like me, or the hotel doesn't like it.
Yeah. Any other things to add here on liquid staking before we move on to the next topic? Sunny.
Yeah,
Sunny,
everyone.
you're not interested in liquid staking.
It's I'm not the biggest fan, but it's not the hill I want to die on. I think there's way more important. It's something that's like, I don't want to necessarily support, but it feels like something to me that's somewhat inevitable. And
Can you expand a little bit on why it's not something you're really willing to support? Or like what's your thinking around that?
I mean, I think I've talked about this a lot, but this is kind of why we designed superfluid staking for Osmosis, as it was a way of saying, I think liquid staking is almost a undermining of the like point of stake of like proof of stake, right? Or of at least the unbonding periods in proof of stake. And so it undermines proof of stake security in a way. What we have been doing is like working with like Stride to like come up with how do we like make it safer. So like I think there's definitely things you can do that like make it so it less undermines the security of proof of stake. So it's not. I think where we're going to end up is actually something that I'm okay with, which is why it's like not the hill I'm going to die on. I think there's more important stuff to tackle.
What about how do you feel about liquid staking? I mean, I guess it kind of becomes I mean, this whole idea of like Babylon and having Bitcoin security support proof of stake security, and then also that being able to reduce the unbonding periods.
They're pretty orthogonal.
I guess.
So there's no like one dimension of security. Security is like a very multifaceted thing, and Babylon's really cool, like big supporter, but it doesn't really solve the issues that liquid staking has. I've spent the last couple months trying to go around to every single liquid staking provider and talk to them about like the key security issues around liquid staking. Just get them thinking about it, like see what their strategy is. Also, if anybody in the audience wants to talk to me about this, like I'm trying to do my part to make sure that this is a secure system. I'm also really glad that superfluid staking exists like as a kind of counterpart to liquid staking. Like I really think that there needs to be much more differentiation in the liquid staking market, because as it's configured right now, like it's going to be winner take all. Like they're not differentiated sufficiently. Like, so if you want to have liquid staking diversity, like you need to basically win some market. So that's I think the optimal outcome from a security perspective is to have a couple different options, and to have these options really competing to provide the most secure product.
So my take is I don't know if it's gonna be winner take all. So okay, my bet on how I imagine the liquid staking ecosystem evolving is actually that it will end up that DeFi apps are actually going to be the liquid staking providers. So, let's say you have something like IBCX, right? What IBCX is going to do is it's not going to accept like ST Atom and ST Osmo and ST Juno into its index. What it's going to do is accept Atom, Osmo, Juno, Secret, whatever, right, into its index. And then the DeFi protocol then goes stakes those assets and takes the yields from those rewards and does whatever it wants with it. Distributes it to token holders, gives it to IBCX holders, they put it as liquidity incentives, it can do whatever it wants with it. But like, I think that DeFi apps are going to want to sort of own that part. It's gonna be one of the main revenue accruing aspects for, I think, a lot of TVL driven DeFi apps.
I think that's one. So just to clarify my statement, like I don't think that I hope that there can be multiple winners, but in my mind, basically, Stride, Quicksilver, and I mean,
Minor.
basically everything except Osmo is insufficiently differentiated. Like there will be one winner in that market as it's configured right now, and they need, and it's okay. Like I hope that they will differentiate further. So that's one option. What Sunny just mentioned. I also think that there might be an option in routing, combining with routing, so that you're doing all the kind of unwinding type services and kind of just-in-time liquidity as part of the liquid staking. Well, this is the kind of like explorations that people need to do in order to actually survive it.
Yeah. I guess the one thing I'm actually like most worried about with liquid staking is this whole like leverage staking stuff that's been happening. That I feel that's actually just like really silly almost. Like you know, people are taking you know, putting, you know, borrowing, this happened on Solana, right? They borrow Sol, they stake it, use that stake Sol as collateral to borrow more Sol, stake it, and they like leverage loop where they've actually only put up a little bit amount of like initial capital, and then they are getting staking rewards on a far larger amount. And then what ends up actually happening is who ends up taking the risk is the people who are lending out Sol on the lending market. And the problem is that when you have compound style like many to many lending markets, like I might want, so basically those people who are lending out the Sol, they're taking on this like risk, and that like almost had a cascade failure during the whole FTX collapse when Solana was like crashing like crazy. Like Sol Lend was about to go effectively illiquid, but like some whale basically stepped in and like, you know, covered it. But like the problem is like in that market, the people who are depositing Sol, they might have wanted it to be allowed to be borrowed against other assets, but they didn't, you know, because it was a many to many market, they had no option in like saying no if someone is using ST Sol as collateral, and then they're taking on this like cascade failure risk. So basically, you know, I think it is important for lending market designers to be like planning for this and trying to prevent leverage staking from happening using their markets.
100%. I mean,
Yeah.
you can do the same thing with MakerDAO, like because it's a lending market behind the scenes, but I think you need to approach risk with a similar kind of diligence if you're gonna go down that road.
Yeah, maybe one final topic here, and Sam, I know you want to talk about this, is the funding environment, and you know, the impact that has on growth in the ecosystem. So, you know, right now, I think fundraising is not easy. I mean, like, I think I've talked to a lot of teams that are raising funds, and they're finding it challenging to raise funds, you know, compared to maybe like last year. Also, I think I find valuations haven't come down that much. I feel like on the liquid, like on the liquid side, like valuations have come down a lot, but startups that are raising are still raising at fairly high valuations. So like, I thought this was the case after Terra collapsed. So they're okay, like valuations should come down. They came down a little bit, not so much. And now they really should have come down, but you know, or at least in my mind, they should have. And I feel like they haven't yet. So what, like, you know, do we think that the funding environment will change fundamentally over the next year? And, you know, what needs to happen for valuations to come down to more sane levels, or should they?
Yeah. I mean, it doesn't like give me any pleasure to discuss this topic, but I do think it's like really important. Like there's a lot of new entrants into the ecosystem. There's a lot of really great people in Cosmos that have not experienced a bear market, and like you need to be really smart with capital management right now, because if the bear market lasts 18 months and like you can't raise for 18 months, like you're gonna need to fire people or wind down. And yeah, I mean, everybody is gonna need to be, I mean, conservative in some respects and like smart with their capital deployment in other respects. Like if you are well capitalized, I think that there can be an enormous advantage to spending right now, but you really need to do so in like a super deliberate way. In terms of valuations, yeah, I mean, I think it'll, the longer we're in the bear market, the lower the valuations are going to go. There's some very, really, as of, I don't know, as of this year, there are like Cosmos specific funds, or like funds that are really like zeroed in on Cosmos, which is amazing, super exciting.
I'm trying to raise one.
Yeah, thank you, Seb. But they're going to be super discerning now. So yeah, I mean, I guess just like word of caution, like bear markets don't take prisoners,
Sito, is this something you've also observed? I know like you have access to like tons of projects, and I think you're also doing a little bit of investing. What are your thoughts on like valuations right now?
I mean, like Sam was saying, I think the longer the bear market continues, the more everything will settle. Unfortunately, probably a lot of smart, good ideas won't happen because they can't maintain the funding. But yeah, I think, yeah, as you say, right now it's still quite high. Maybe we just have a boring year ahead of us, like where nothing happens, Bitcoin just doesn't move, everything dries out, liquidity goes gradually down, and that's where we really like bottom out. The valuations hit a really bottom, and that's probably the time where the VCs and also like traditional funds are getting interested again to place bets in crypto and diversify. So, but I think like there's so many things attached to it, right? Also the macro environment. We haven't talked about this at all, but I think that also plays a big role. What's going to happen there? Regulation, right? Like there's so many things. So yeah, but I mean, personally, I think, yeah, this year might just be a boring year. And then towards the end of the year or early next year, like early 2024, we might just see the real bottom with everything. And then from there on, there's like all the bad actors are washed out, and then from there we can just go back up again. But yeah, let's see.
I have a hope for this year, which is there is a 10x, 100x improvement that we can make on community pool management. I mean, I was trying to get at some of this with Atom 2.0. People didn't love it, but we can be working way smarter than we are there. And I don't know, just a lot of people's just general framework for thinking about this is just completely wrong, to be perfectly honest. Like they're not rewarding talent, and they're not getting people long-term incentivized, and they're not like making smart spending decisions. If anyone went into any stable coins 6 months ago, like they would be in a fantastic position right now. I do think that there's going to be a bunch of requests for community pool spends. Most of them are going to be terrible. And yeah, and just better tooling, more kind of professionalized approaches to how like what are the components of spending? Like what are we spending on marketing as a percentage of our like total cash flows, or the total assets under management? Like these are just like not questions that we're asking right now.
Well, I mean, like there was a little bit of drama this week with that whole Osmosis ad on Bankless, which people are scrutinizing. I actually think that So being a podcaster, having sold ads on a podcast, I think that's not like out of this world, in terms of the cost versus the benefit. I mean, Bankless is like a huge audience, and it's these sorts of things help also create awareness,
and importantly, a different audience, right?
And a different audience. No, I mean, that was my whole point. Like, it's not only they have a huge audience, they have like a massive audience of people who don't necessarily know that much about Cosmos or Osmosis, and when USDC gets turned on, like, these are people who could potentially come into the Cosmos ecosystem. So I support that sort of thing. But yeah, there are some proposals I think that are a little bit less. I think like governance and community pool spending really needs to improve, and I'm really hopeful that the tooling around this stuff really kind of starts to mature over the year. And
I mean, to be perfectly honest, I also think we just need to grow up with like the call out culture stuff is like so toxic. We need to make sure that people who are working hard feel like psychologically safe in their work, and have at least a professional kind of tone around like how we're kind of cordoning off work and asset allocation. So I mean, I think we should be just rethinking like the kind of supply chain there. Like, we should try to have KPIs that we're working towards, and we can kind of like share some understanding of like what we're trying to achieve, and and then work against some kind of or just like build a coherent strategy around that. Like, maybe you think that 50K is a lot for a Bankless podcast or whatever, but like, what was the rationale behind the ad placement in the first place? It's like, our objective is to grow the user base by X number of people with this kind of lifetime, and this is our allocation to do that. Like, this is where we think that we can best spend our dollar. Like, you need to work in that order in order to even say anything coherent about whether this is a correct, the correct allocation.
Also, to that point, Sam, I think, like the past 2 years, and especially before IBC went live and shortly after, everybody complained Cosmos is going to fail because it doesn't have marketing. Now you have a lot of people coming, doing marketing, and maybe some of the things are not worth the money, but you also only know that after the fact, right? So, and then there's a lot of people doing stuff, and then they get a lot of headwind, right? Like, we even got a lot of headwind for Cosmoverse, and it's like Sam is saying. I mean, it like, we didn't get threats or anything, but still, just to get this constant headwind from some people, it's a far minority, to be honest. I think the far.
You mean for getting community pool money for a sponsor?
Yeah, because we made on-chain proposals, right? And like, unfortunately, AV companies and conference venues don't accept Juno or Atom or Osmo. So unfortunately, we are in that position. But this, I think what Sam was raising, that point, and maybe we can do a whole separate session about this with some other key people. But I think this whole point that there's a lot of toxicity, especially from accounts that are anon, that don't have any followers, that are brand new, that are just probably like one person that's like has multiple accounts, and it's just very aggressive and toxic, and like spreading weird theories, or even like threatening people. I mean, we saw a lot of toxicity around Atom 2.0. So I don't know. I mean, it's wild, but yeah.
Yeah, I mean, I'd love to do a chat about that with some relevant people. I think you would be one of those relevant people. Yeah, we're about ready to start announcing things around Nebular Summit, and this year we're last year we did get one on-chain proposal from Evmos, and I think like the community supported that pretty broadly, and we were also, one of the things that we did that I think a lot more people should do is be accountable, right? So like after the event, we published this post on Commonwealth and we said like, hey, Atmos community, like this is what your marketing dollars got you with, the event, the people who attended, the workshops, the talks, like all the visibility on Twitter and everything. And like, I think this is something that we, like the different communities should expect more of. Is like when you do a proposal, you should have some deliverables to show for it. Just like if you're working with like an agency or any sort of service provider, then maybe some amount of time locked money or like money unlocked in different like amounts over time when deliverables are met. Like, of course, this is something that more complex like smart contracts could achieve, or like DAOs. But yeah, I'm being in the bear market compared to like last year when we asked for this money. I'm curious what kind of response we're going to get this year, because we're probably going to be asking for more money and also like on separate chains. And so I think we're all going to get a little bit of pushback.
So, 100%. Yeah. You'll definitely get a pushback. But also like, just like people that I'm sometimes really wondering, like, especially on Twitter. And again, like it's a far minority and it's mostly new accounts with no followers that nobody ever saw, that are not engaged anywhere, that are like hiding behind whatever avatars or whatever, that are just typing and sending messages. Where I'm like, why would you even send that? Like, why would you even create a cult of like toxicity? That doesn't make any sense to me. So I think, this probably is also a side effect of the bear market. People are just way more emotional right now, maybe lost a lot of money, right? Like we've seen literally people lose everything overnight with Terra, with FTX. Like it's pretty brutal. Like this year or last year was really, really brutal. And I totally understand like when some people just get very, very emotional and like just go on the internet and just type whatever they want. But like to Sam's point, again, I think they also got a lot of hate for no reason. And they're some of the most passionate, active builders for so many years in Cosmos. Like we should all be learning from them instead of giving them headwind for having great ideas and being active, right? And I always say, like when people complain, rather like if you complain, just propose a better idea and like try to gain traction with that idea. Don't just complain and create a cult around it. Just make something better. If you have a bad idea, just do it. Apparently, some people know it better, so they can just do it. But then they also don't do it, and then that's the end of the day. So
you honestly don't even need to go that far. You just don't need to like fuck somebody else up. Like just ask a constructive question rather than like try.
I feel like you're speaking from experience. So
yeah, there's some personal learnings here. A little bit of bitterness. Not gonna lie.
Yeah. So on that topic, and I realize we're a bit over time here, but I do want to ask this question, and because it's been asked a few times in the chat, is what are the next moves for Atom 2.0? I gotta say I'm not fully clear on this. I know ICS is due to come on board, but online. But what about the other components, and what's the plan here?
Yeah. I mean, I think it's kind of I have my own opinions, but clearly those opinions are don't hold a lot of weight these days. So ICS is definitely, seems like there's a lot of support. Liquid staking is like kind of the next logical step. And so that potentially means adoption of the liquidity staking module. And then I wrote this on the forum. I think the path of least resistance is just kind of trying to double down on ICS go-to-market, and trying to solve some of these liquidity issues, because that's going to be a big component.
Great. Well, looking forward to ICS. I know there's a lot of chains that are due to launch on ICS, and it's something that I think has a lot of support in the community, and people are just like kind of waiting for it. And And I think, it is certainly, the part of the Atom 2.0 proposal that had the least resistance. So I'm excited for it. Maybe some last words, guys. What's what gives you the most hope for this year, and what gives you the most fear?
Maybe I can start something.
Go for
it. So, I mean, most hope, if we talk about Cosmos, like we talked about this in this show the entire time, there's so much activity, so many projects in the works. IBC is going across different ecosystems outside of Cosmos. So I think Cosmos-wise, it's all on track. Crypto-wise and macro-wise, obviously there's a lot of uncertainties. We have to see how things play out. But that's just also we can't influence that, right? I think we as a community in Cosmos can just do our best to talk to each other nicer, to be a little bit more respectful, to also provide constructive feedback. I actually like feedback, and I think all of us do, but it needs to be constructive and respectful. So I think that's something we can work on as a community. But yeah, obviously the highlight for me is going to be Cosmos this year in probably Q3, Q4. So we're still working. We're already working on it. So that's going to happen. Really, really pumped about that. And also what we want to establish is satellite events around the world. So we already started with Atom Lisbon. We had Atom Punta Cana in the Dominican Republic. They just did autonomously without us as kind of the organizers. They just did Atom Santo Domingo a couple of weeks ago. Atom Bangalore happened very recently. The Indian community is also huge. So I think from a community and event perspective, there's a lot that's going to happen this year. And I think even if there's no new capital being injected into crypto because macro is bad, still within crypto, the cards get reshuffled, right? And you see a lot of other ecosystems drying out a little bit or just not having a lot of demand right now. And what we talked about today, you can already tell that there's so much demand for Cosmos. So I think even though if crypto goes down as a whole industry, Cosmos might just, still become more popular, also more valuable, right? I also would love to see Atom just, get up in the rankings a little bit, because that's obviously also going to bring in a lot of eyeballs. So yeah, I'm excited about everything, and I'm in general a very positive person. So there's not much that worries me this year, but there's probably a lot of things to worry about. So yeah, I don't know what you guys think.
Yeah, I have similar thoughts. The Ethereum killers were, I think they're gonna stick around, but they weren't differentiated enough, essentially. And the Cosmos ecosystem brought real innovations. It took us a long time to build them, but that's finally being validated. And one thing that's been super encouraging is for the first time this year, I've had folks from the Ethereum Foundation, folks from Flashbots, the Ethereum is looking at Cosmos for ideas and
yeah,
and kind of leads on where they should go next, and that's really validating. And yeah, I couldn't have said that until this year. We hadn't really crossed that threshold of kind of notoriety and validation in some of the core theses.
Yeah. What am I hopeful for? Kind of what I said at the beginning, right? I think there's a lot of, just really excited to keep executing on our roadmap. Bringing privacy, better custody solutions, starting to see more applications Mars launching very soon, IBC and IBCX, Stream Swap, all this stuff. A lot of the stuff that's been in works for a while, starting to be launched. What am I worried about? I mean, this is going to be like a little bit like complete, like out of left field, but I want to make sure that like there's enough innovation happening on stablecoins, or like digital fiat currencies. I think that like obviously the Terra collapse like kind of hit everyone really hard, and it also caused like a lot of regulatory backlash. But I actually, my strong belief is that kind of what there's a few major products I wanted to see happen in crypto. One was a privacy oriented DEX, but then another one was digital fiat currency, like non-government backed fiat currency. And so I think I'd like to make sure that we don't lose sight of that. At the end of the day, it was originally the cryptocurrency industry, and if we're not trying to actually reinvent currency properly, kind of, I still think we can accomplish a lot, even like just through DeFi alone. But I think I'd still like to make sure we're making progress in the other stuff as well.
I have one question for, sorry, one question for Sunny. Which would you say would be the strongest competitor for Osmosis this year? If you see any.
On which axis? I think Osmosis does a number of verticals. And like, is it as a DEX? Is it as a, Cosmwasm development platform? Like on which axis, I guess?
I would say as a DEX.
As a DEX? I would say, honestly, Thorchain has been like crushing it recently. Like if you look at, I actually think in the last 1 month, Thorchain's volumes are higher than Osmosis's. They've been integrated into Trust Wallet as the native swaps, and they're focused beyond just the Cosmos ecosystem, which is also what we want to do as well. But like if you look at actually the volumes of like swapping from ETH to BTC on Thorchain, it's actually quite impressive.
I was just looking at those numbers the other day. They're putting up numbers.
Yeah, exactly. So
and they have integrations into chains that Axelar isn't reaching right now, for instance.
Yeah. Yep, exactly. So I actually think that like out of the Cosmos space DEXs, I think Thorchain is probably the one that's like crushing it the hardest right now.
Are you of the camp that think that Uniswap will move to its own app chain at some point?
I don't think they will, to be honest. Yeah.
You think they can remain competitive as an Ethereum smart contract?
I mean, they are on more than just Ethereum, right? They're on Polygon, but yeah, I think they're taking a very a deployment per EVM, and I think they are taking a very I don't see them doing anything beyond other than EVM for a while, and I think they're very all in on this like EVM centric view of the world.
Yeah, no, but I mean, like on like, can they remain competitive on pricing on Ethereum with Ethereum fees being so high plus MEV?
But my point is like it doesn't have to be Uniswap on Ethereum. Even if the Uniswap instantiation on Ethereum gets like if let's say the Ethereum EVM world still wins, even if it all goes to Polygon or Ethereum L2s or whatever, Uniswap's already there on all of those as well. So volumes might just move there instead.
Yeah, right.
Uniswap's like their market is uninformed order flow, and to stay relevant, I think that they're going to need to go down the pay for order flow route like really hard, because they're not going to be competitive on the other dimensions, like because they're doing this like per EVM thing, like the capital efficiency is all whack. So they just need to harvest that uninformed flow.
Yeah. All right, guys, we got to wrap this up. Thank you so much for joining me on this this very, very fun panel. Unfortunately, Felix had to drop off at some point, but thanks, Felix. I know you're probably listening. And Cryptocito, Sam, Sunny, my thanks for your time and for your fantastic insights here today. And I know everybody watching absolutely appreciate it. So hope to do this again soon.
Thanks, man. Thanks for hosting.
Yeah,
thanks,
thank
guys.
you. Good luck, everybody, 2023.
Yeah. Cheers.
Bye.